Assalamualaikum and good morning. Today I would like to do a visual presentation about annual report and presentation for subject FAR560 Financial Accounting and Reporting. This is my group member Azra Azima, Azima Ta'ali, Nurshida Ta'akmat, and my name is Sharifah Nadra binti Abdul Karim. Now we proceed to company background. As for the local company, we choose Riches Energy Berhad, which is located in Malaysia. This company was established on 7 February 2013 and was listed in Bursa Malaysia Security Berhad. The group recorded about 152.9 million of revenue from the crude oil sales for 2017. As for revenue for gas sales is 4.2 million. This group using FAR560 for the exploration for the evaluation of the mineral resources. For the international company, we choose Northern Star Resources Limited, which is operated in Australia. The company primarily holds interest in Jundik, Kundana, and many more. And it was located in highly prospective region of Western Australia. The profit ended 30 June for 2017 is 215.3 million after profit after tax. And this company using AASB, which is Australian Accounting Standard Board 6 for exploration and evaluation expenditures. Next, basis of preparation. As for the Rich Energy Berhad, which is local company, the consolidated financial statement of the group and company have been prepared in accordance with the Malaysian Financial Reporting Standard MFRS and Companies Act 2016 in Malaysia. As for the international, which is Northern Star Resources, general proposed financial statement have been prepared in accordance with Australian Accounting Standard and Australian Accounting Standard Board and Corporation Act 2001. Northern Star Resources Limited is a profit entity for the purpose of preparing the financial statements. It is clearly stated in Note 2.4a. It is compliance with IFRS. Next, regulation of exploration and evaluation of assets for Rich Energy Berhad and Northern Star Resources Limited. Now for Rich Energy Berhad, shall apply paragraph 10 of MFRS 108 accounting policies changes in accounting estimated and errors. Temporary exemption from MFRS 110 paragraph 11 and 12. In the absence of MFRS that specifically applies to a transaction, other event or condition, management shall use its judgment in developing and applying an accounting policy that result in information that is relevant to the decision-making needs of users and reliable in the financial statements. That's all.
My name is Nurshida binti Bazdi. Next is identification of element is oil and gas equipment, drilling equipment. Next is classification of exploration and evaluation of asset is tangible asset. They are recognized and classified under property, plant and equipment. Next, accounting policy for Rich Energy Berhad is successful effort method. Based on Note 3.6, the successful effort method is of accounting is used for oil and gas exploration and production activity. Under this method, geological and geophysical costs are expenses when incurred. Cost of exploratory wells, including certain geophysical costs which are directly attributable to the drilling of these wells. Capitalized as exploration and evaluation asset, pending determination of whether of wells find proved oil and gas reserve. Should the effort be determined to be successful, all costs for developments, wells, supporting equipment and facility, and proof mineral interest in oil and gas property are capitalized. Next, the recognition, exploration and evaluation of asset for Northern Star Resources Ltd. For the paragraph 11, when developing its accounting policy, an entity recognizing exploration and evaluation asset shall apply paragraph 10 of AASB 108, accounting policy change in accounting estimates and errors. For AASB 108 paragraph 10, in the absence of an historian's accounting standard that specifically apply to a transaction, other event or condition, management shall use its judgment in developing and applying an accounting policy that result in information that is relevant to the economic decision-making needs of users and relevant in that the financial statements. The accounting policy for non-third store is include the cost of incurring license costs associated with exploration and evaluation activity. Exploration and evaluation expenditure is capitalized on an area of interest basis. Costs incurred before the group has obtained the legal rights to explore an area are recognized in the statement of profit or loss and other comprehensive income. For mine property of Noted Star Resources Ltd includes aggregate expenditure in relation to mine construction, mine developments, exploration and evaluation expenditure where a development decision has been made and acquire mineral interest. Expenditure that include are direct costs of construction, drilling costs and removal of urban burden to gain access to the ore, borrowing costs capitalized during construction and appropriate allocation of attributable overheads. Next is measurements, exploration and evaluation of assets for Rich Energy Berhad and Noted Star Ltd.
My name is Azra Azima binti Rosli and I'll proceed with the measurement, exploration and evaluation of asset. First, I'm going to talk about Rich Energy Berhad, which is from expenditure view. Exploratory wells in area not requiring major capital expenditure are evaluated for economic viability within 1 year of completion of drilling. Then the related well costs are expensed as dry holes if it is to mean that such economic viability is not attained. In making decision about whether to continue capitalizing the exploration costs, it is necessary to make judgment about the economic viability of the exploratory wells. If there is a change in one of these judgments in a subsequent period, then the related capitalized exploration costs will be expensed in that period, resulting in a change in a charge to the profit or loss. Next. First, it is about impairment of the property, plant and equipment. Determination as to whether and how much an asset is impaired involve management estimate and judgment, such as future prices of crude oil and production profile. However, the impairment reviews and calculation are based on assumptions that are consistent with the group business plan. Favorable changes to some assumption may allow the group to avoid the need to impair any assets, whereas unfavorable changes may cause the asset to become impaired. Asset carried at an amortized cost. The group and company assess at the end of each reporting period whether there is objective evidence that its financial asset or group of financial asset is impaired. A financial asset or a group of financial asset is impaired and impairment losses are incurred only if there is objective evidence of the impairment as a result of one or more events that occurred after the initial recognition of the asset. A loss event, and that loss event or events has an impact on the estimated future cash flow of the financial asset or group of financial asset that can be reliably estimated. Next. Why this is about Northern Star Resources Limited, the depreciation and amortization method, item of property, plant and equipment, and mine properties are depreciated or amortized over their useful life. The group uses the unit of production basis when depreciating or amortizing mine-specific asset, which result in a depreciation and amortization charge proportional to the depletion of the anticipated remaining life of mine, which is refers to the estimated economic reserve and the resources of the property to which the assets relate. And each item's economic life, which is assessed annually, has due regard to both its physical life limitation and to present assessment of economically recoverable reserve and resources of the mine property at which it is located. Next, the mine development represents expenditure in respect of exploration and evaluation, overburden, removal based on the underlying mining activities and related mining data, and construction costs and development incurred by or on behalf of the group previously accumulated and carried forward in relation to properties in which mining has now commenced. Such expenditure comprises direct costs and appropriate allocation of directly related overhead expenditure. And then the mine development costs as transferred from exploration and evaluation and mines under construction are amortized on a units of production basis over the life of mine to which they relate. In applying the units of production method, amortization is calculated using the expected total contains ounce as determined by the life of mine, plant determine property. For the development expenditure undertaken during production, the amortization rate is based on the ratio of total development expenditure incurred and anticipated over the expected total contents ounce as estimated by the relevant life of mine land to achieve a consistent amortization rate per ounce. Next is the impairment of exploration and evaluation of assets for the Northern Star Resources Limited. This is a screenshot from the financial statement for the impairment of asset. So at each reporting date, the group assesses whether there is any indications that an asset or a group of assets is impaired. If any such indication exists, the recoverable amount of the asset is estimated to determine the extent of the impairment loss, if any, which is the amount by which the asset can be valued exceed its recoverable amount. Where the asset does not generate cash inflow that are independent from the other asset, the group estimates the recoverable amount of the cash generating unit, which is CGU, to which the assets belongs. The recoverable amount is the higher of fair value less cost to sell, FAR560, and value in use. Next is disclosure or reclassification. An exploration and evaluation asset should no longer be classified as such when the technical feasibility and commercial viability of extracting a mineral resource are demonstrable. Exploration and evaluation assets shall be assessed for impairment and any impairment loss recognized before reclassification. Then an entity shall disclose information that identify and explain the amounts recognized in its financial statement arising from the exploration for an evaluation of mineral resources. To comply with the statement above, an entity shall disclose A. its accounting policy for exploration and evaluation expenditure, including the recognition of exploration and evaluation asset, and B. the amount of asset, liabilities, income and expense, and operating and investing cash flow arising from the exploration for an evaluation of mineral resources. An entity shall treat exploration and evaluation asset as a separate class of asset and make the disclosure required by either MFRS 116 or MFRS 138 consistent with how the assets are classified. That's all from me.
My name is Azimatul Aliyah binti Salih, and I will proceed the presentation with the revenue recognitions. First, for the local company, which is Rich Energy Sdn Bhd. For the Rich Energy Sdn Bhd, the revenue is measured at the fair value of the consideration received or receivable. The group recognizes the revenue when the amount of revenue can be reliably measured, and the revenue is recognized when the delivery of crude oil and gas under the relevant contract and the other condition that has been discussed. The revenue of groups is derived 100% from the sales of crude oil and gas. And the revenue is also recognized on the transfer of risk and award of ownership. In case of gas, it is recognized when the gas arrive at the pipeline. As you can see in the slide, in the consolidated statement of comprehensive income, the total revenue, which is 222,284, is from the total of sale of gas and sales of crude and oil. And I will continue with the international company, which is Northern Star Resources Limited. In the company Northern, the revenue is recognized when the extent that it is probable that the economic benefit will flow to the entity and the revenue can be reliably measured. And revenue is measured at fair value of consideration received or receivable. Revenue is recognized when there has been a transfer of risk and reward from the groups to an external party, and no further processing is required by the groups. In the consolidated statement of profit and loss, the sales revenue, which is 964,025, which is from the sales of gold, sales of silver, and sales of and the toll of treatment. That's all from us. Thank you.